We are back with Harry Wilson, the former advisor on Obama's task force, but also joining us is Todd Harrison. He's the CEO of Minyanville Media and also has been on the trading desk for years at Morgan Stanley, right? And other places. So I want to get Todd's take first on how do you think this is going to all play out, this debt deal play out in the market?
Well, we talked about it on Thursday on Bloomberg that I thought there was a rally in the works. I thought the default was off the table. I think the default's off the table. But ultimately, this is the perception. The difference between perception and reality is where the profits lie. I think we'll see some upside movement. I think we're going to see a downgrade coming, so I keep that in the back of your mind. But if we could work through last week's highs and you got some room on a technical basis that could suck in players to the upside.
So it sounds as if, even if we get a downgrade, is that going to cause a huge market reaction, do you think?
Well, you have to remember that we've seen downgrades before. Canada, Japan, Australia, they've gotten through it. I think ultimately this package that they're talking about in terms of the debt ceiling will prove to be a Band-Aid on a broken bone. But you trade the market that you have, not the market that you want. You take it step by step. Right now, 1250, 1350, either way on the S&P is where you want to set your risk parameters.
Harry, are we were just talking about the downgrade a few moments ago. I mean, are we downplaying the downgrade threat at all? Perhaps not you, but overall the markets?
No, I think people have started to build it into their expectations. I think the economic fundamentals speak for themselves. The long-term financial fundamentals in Washington speak for themselves, and I think the market sees that. And so I think whether it happens in September or early 2012, I think it's almost inevitable at this point.
Todd, what do you buy here?
Well, I'll tell you this: I don't buy what's coming out of Washington, because the only problem with politics is that there are too many politicians, and they're using this as a way to kind of further their own agendas. I think right now as a country we need to take away whether you're a Republican or a Democrat, and we need to be an American right now. And I think there's two sides to this. There's upward taxation, there's austerity measures. I think we have to take our medicine. Remember, if you're overseas and you're seeing this go on after we exported the financial crisis, you're not that happy right now.
Yeah, but I mean, really buy. Like, what do you buy? I mean, Harry was buying the VIX up until last week or so. What do you actually really buy?
No, well, I'll tell you this. I'm not ducking the question, but I think I play the market with a stair-step lens in my trading account. I let the market tell me what is going to happen, what unfolds in the future. So right now, I'm a little bit more conservative, or I was the last couple of weeks. As I said on Bloomberg on Thursday, I was positioning a little bit for a rally, but I'm playing the indices and I'm keeping tight risk. I'm managing risk rather than chase rewards. I think they're going to try and press them down here today, and then from there you'll see the true tenor emerge about an hour and a half into the market.
Harry, let me draw upon your Washington experience, because we were talking about, look, is any of this going to create jobs, right? And there's a lot of questions about, it's not going to create jobs. In fact, it might actually make it even worse. So having seen, TARP, the auto task force or whatnot, I mean, are we any better off now than we were before?
Well, it depends on where before starts. If those before starts in March of '09, certainly we're better off. I mean, we avoided what could have been a second Great Depression. And so I think we kind of took complete destruction of the financial system off the table. But we still have a lot of rocky road ahead. And so I think the fundamental challenge is no one's really addressing the core problems. The core problems are entitlements on the one hand, that's driving the budget picture. And the second hand, we have just a very anemic growth, in part because we have an overgrown public sector and because we haven't really invested in innovation in this country in a long time.
Have you been keeping track of GM shares?
I have. I think they're dirt cheap.
They're cheap. They haven't done well since that IPO, and you and I talked about that before. Why don't you think the shareholders are buying into it?
I think part of it is concerns about the economy. And you've seen just this morning the expectations for July SAAR came out around 11.5 million, which is a big step down from the 13 that people were expecting for most of this year and that the year had been doing. So I think part of it's purely driven by the economics. But even at 11.5 million SAAR, the valuation on GM is really cheap. It's a little bit over 3 times EBITDA. If you believe we stepped down to that level, I think it's probably too conservative. And so I think people were just overselling the economic impact on GM and Ford for that matter.
Yeah, no, I'll just say to your point, I think there's a difference between the destination we arrive at and the path that we take to get there. So I think it's a bit premature to talk about how we averted the second coming of the Great Depression, because we need to remember that the Depression was an era. It wasn't an event. It wasn't something that just happened. It was dragged out over 10 years. I think what we're doing now, we staved off the car crash, but we inhaled the cancer in the process. And by doing that, this is going to elongate. It's going to drag out this process. Doesn't mean that it's Armageddon, the end of the world. It means we're going to have to deal with higher rates. We're going to have to deal with the problems that got us us here in the first place if we want to get through to the other side, and I think we will.
But that means a lower market then for the rest of the year?
Ultimately, yes. I think the more, well, it depends on the dollar, right? Because everything's denominated in dollars, but I think ultimately we're going to see the other side of this coming through, and I think that's okay, because in order to get through it, we need to go through it. So the sooner we're allowed to go through it, I think the quicker we'll get to it.
Okay, Todd, thank you very much. Really appreciate it. The CEO of Minyanville Media, and also appreciate Harry for staying with us through this whole hour.